Mahesh Patil is with us, CIO at Aditya Birla Sun Life Asset Management Company. Mahesh, good to have you with us here. Thank you very much for your time. Uh, what's the prognosis? How's the health of the market looking, Mahesh? You know, the consensus view has been it's large caps. The era for not the era for but the time for mid caps and small caps, the best for them is behind. But look at the price. I mean, the screen is telling you something else. So just wanted to start there in terms of how you're thinking about that, because in a way, animal spirits in the market are back with increasing conviction that this big global rate hiking cycle is behind. And if the Fed does not hike and actually cuts, the bar for others to hike also actually goes up quite a bit. Go on.
Good morning. So you're right, actually, in the last couple of weeks, right, we have seen that, especially on the global front, the concerns which were there about interest rates, where they'll peak out, okay, what will happen over there, to what extent the rate will remain higher for longer. I think those are kind of the concerns are receded. We've seen a risk on rally a bit globally, and that actually puts a floor to the markets, right? So earlier, one was not sure where the market will bottom out. I think in the backdrop of what's happened globally, and now markets are very clear that the rate tightening cycle is behind us. I think we're seeing more money coming in and chasing the markets over here. And that has given a fresh leg of move to our markets as well as the global markets. Fundamentally, I would say that the overall earnings season also, which has come through, has been fairly decent. I mean, there have been some disappointments in a few sectors, like, for example, IT and consumer discretionary. But by and large, we have seen the earnings expectations for this fiscal year remains fairly intact. And that should be a good sign for the markets to really hold on and to consolidate. It's consolidated now for quite some time in this region. And I think overall, while we still believe that the large cap space relatively looks better because it's underperformed in the last. I mean, in fact, in the last 2 years, if you look at the really large companies, they have not really gone anywhere. And mid caps, small caps look to be slightly relatively euphoric, okay, because of the retail money which is coming in. But again, it's been going to be more stock specific in the small and mid cap space, right? The tail, okay, in the small and mid cap space, which has gone up, I think that's where one needs to be slightly worried about. Otherwise, fundamentally, the markets look fairly strong. I think a lot of sectors and companies are doing reasonably well. We've seen some recent, again, this move from RBI in terms of the banking and financial services sectors in terms of increasing the risk weightages. That's a tad negative, but I don't think that's really going to hurt the market overall momentum.
I get that, Mahesh, and I just reminds us of why the Indian banking sector has been so resilient in times of crisis, global storms, etc. It is because our regulator has been way ahead of the curve and has not shied away from taking action preemptively and then whenever it has been necessary. So kudos to the RBI for that. But having said that, Mahesh, what should the approach be? I mean, financials anyway, at least the big banks, they've been lackluster in terms of performance, and now you have these fresh headwinds, perhaps slower growth. What would your approach be to big banks? And then we'll talk about NBFCs.
Actually, if you look at while definitely there is some impact in terms of your CET1, the saying capital impact of around 50 to 100 basis points for the larger banks. But I think if you look at over a medium term, the larger banks would actually be a bit beneficiaries, I would say, because especially banks which are well capitalized and have raised capital recently, I don't think it should really impact much. On the growth side, while we think that the NBFCs could slightly get impacted more there because their cost of funds from the banks would go up. And to that extent, I think the larger banks, a lot of NBFCs were growing much faster, especially on the retail side and taking market share. I think that could probably turn a bit, and the larger banks could, in the end, do slightly better. So I think we're not negative on the larger banks, especially banks which are well capitalized. And I think the impact on growth also will be marginal. I think I don't think there'll be any impact on the profitability per se, because banks will tend to pass on whatever they can in terms of increase in the overall yields to the end consumers.
Hi, Mr. Patil. Good morning. Nigel on this side. When we spoke last, you were talking about this building products divisions could do well since the real estate sector is coming back in style. And as we speak, we also have crude oil prices that have dipped. So from the building products division itself, what all would you look at? Would you look at tiles, paint companies as well? Because as we speak, actually, Asian Paints is one of the biggest gainers. Your view out there?
Yeah, so we've been positive on the real estate sector. We've seen that this cycle is, after a long period, we've seen the cycle now move up. Overall, inventory levels in the industry are much lower. And there's a genuine demand, okay, which is picking up. So given that, I think you will see the trickle-down impact on the building materials. Normally, it is with a lag impact because once the house is constructed, then you require some of these materials. And while currently the demand for some of these building materials is picking up, but not to that extent. We think that could improve in the next fiscal year. And here again, I think it will be, I mean, some of the tile companies, or whether it is the paint companies, or even later down the line, okay, the consumer durable sector, because that is something which will come at the last leg of the overall cycle. That's a sector where I think you could see things improving going forward. Again, some of these sectors were impacted because of the increase in the raw material prices, especially gas prices, and to some extent oil. I mean, the oil prices which have moved up. I think kind of pull down on some of these prices, I think should benefit in terms of margin improvement. But I think the key is in terms of volume growth, which is still not up to the mark, I would say. And I think that should come back, I think, sometime in the next fiscal year.
Okay. All right, Mahesh, thank you very much. We will leave it on that note for this morning. Appreciate you joining in and giving us your view on the market. Have a good day.